All right, Candle Range Theory Trader back with you with another video showing you how you can create your own candle range theory model. So let's not waste time and get right into it. A lot of people aren't aware that you could actually create your own candle range theory model. So I've done a few models on here, nothing wrong with any of them. Everything works, nothing doesn't. But the thing is, we're all different traders, okay? All you need to do is find the candle range theory that appeals most to you. It can be customized to fit your own trading schedule and preferences. All you need to do is three things. You need to identify the structure slash the pattern that you like the most, the time frame that you like to trade, and the entry model, which is your lower time frame entry. That's it. That's all you need. Okay. So I'm going to walk through these and you pick what you like the most. All right. So here we go. So these are the structures that you can choose from. And this isn't even all of them. These are just the main five. So this is the classic candle range theory model. And this is based on a daily chart. Okay. Monday, Tuesday, Wednesday. All right. So you can trade this. This can be your bread and butter where your only trading days could be Tuesday and Wednesday. And this is all you're looking for. All right. This is basically evening star. For a long example, you can do a morning star where this is this middle candle here Tuesday is just down here and you're going long. This example here, you're going short. All right. So, but what if you decided to use a 4 hour chart with this same pattern? All right. This is a 2100 or 9 o'clock p.m. Eastern Standard Time, 1 a.m., 5 a.m. entry or structure. Three candles, same thing. One, two, three. This is just a long example. Same thing, but this is a daily, but this is a 4 hour. All right. I hope that makes sense. So same structure, but just a different time frame. Okay. There's nothing that says you have to trade a daily. You do not have to. You can trade a 4 hour and take your entries on the 15-minute chart. Okay. This is the 15-minute chart entry window right here. So your best entry based on the candle range theory model would be around 5 a.m. This will be a 1 to 3. You got an 8 pip stop loss and a 25 pip take profit. Done. Okay, using this model right here. Now I'm always taking entries based on this candle right here. Okay, the expansion candle. So we let these two play out, and this is the trading window. So you'll have to back test that for yourself, but just for the sake of ease of use, all entries will be illustrated on this last candle, candle 3. All right, unless it's less than a 3 candle pattern. All right, so but here we go. Next structure is the 2 candle CRT. Okay, now this time frame isn't actually labeled, but all this is just 2 candles whereby you have a range, and then you have one side of the range being swept and then tanking. This is a short example. All right. So what time frame would you like to see this on? Maybe you'd like to see it on an 8 hour chart. Now, I rarely have I even heard anyone mention an 8 hour chart, but you could put TradingView on an 8 hour chart and you could check the trade twice a day at the most to see if anything works out like that. So this is the exact structure. This is candle 1. This is candle 2. This is candle 1. This is the 1 a.m. This 8 hours worth of price action. This is candle 2 where your trading takes place at 9 a.m. Okay. And let's say we have an entry model where we want to take our entries on the 1 hour close, which means you're only taking trades at 10, 11, 12, etc., etc. All right. So this entry is going to be a little different because we wait for price to close back inside the range. All right. That's red line right here, right there. Okay. So, or on this pattern here, entry would be right here since it's only a 2 candle pattern right there. So entry is right here at 10 a.m. This is a 1 hour chart. Entry at 10, and then 1, 2, 3, 4 hours, you got 1 to 5 risk to reward return. All right, using an 8 hour chart. And if you just want to trade that, that's it. So you're just trading the 8 hour and 1 hour. 8 hour, 1 hour for your entries. And that's it. That's a custom model. That could be your specialty. But what if you don't like that and you prefer the multiple candle range theory? That's fine too, where it always starts with the range candle here, the manipulation candle, or I like to call it the money candle that pokes above the range and closes back inside of it. And then you have 1, 2, 3 more candles of downside till the range gets completed. All right. If you like that, this is the same structure on a 4 hour chart. Here is the range candle right here. I'm sorry. I apologize. This is the daily chart. I apologize. This is the daily chart. I should have cropped out these 3 leading candles up to it, but this is the range candle right here. Okay, this is the range candle right here. Now, here's the thing with this, and I'm gonna take my time with this one because even though the time frame is daily, if the manipulation candle or this right here, this candle too is long or it's a big one, remember we're not trading here. We let this play out. We want to wait for price to get above 50% of this candle's range. So let me go back to this example. This candle right here, let's say if this candle was much bigger, right? Using a fib, all you need is the one level. All you need is a 50% level. And you just take trades based on 50% of this range right here. Okay? 50% of this range right here. And we'll take our entries on the 4-hour chart. All right, so this is a daily range manipulation. So now we start trading. Now that the range is underway right here. And this is Wednesday, Thursday, and then Friday. Monday and Tuesday gave the entry for the price to complete the range. But let's take a look. Let's drop down to the 4-hour chart. So this is the 4-hour chart. We see how price goes down and then back up. The best entry would have been at 9 a.m. right here. This 4-hour candle open. Okay, 15 pip stop loss, 75 pip take profit. And it just went down, and that was it. Very little drawdown. But again, these two candles right here, 1 and 2, have already played out. So now you're just waiting for price to retrace a little bit and then go down some more to complete the range. But again, it's based on this structure. Now that's a little more complex, but if you like how that sounds or if you want to try that, feel free. Again, this is a daily to 4-hour candle range theory. All right. So that's that. If that doesn't track with you or doesn't exactly make sense, just rewind it and watch it again. Okay. So next one we have is an inside candle range theory. So we have the range candle, and sometimes candle 2 doesn't always give you that manipulation above the range. Sometimes it comes a candle after. All right. So you have the poke above, close inside, and then you're looking to trade somewhere down here. So let's try to find that model here. This is a 1-hour. All right. So this is this structure right here on a 1-hour chart. But here's the thing. So first off, the time frame is 1 hour. This is the range candle right here, where the top and bottom of the range. And you see here, these candles just kind of dance around a little bit, and then it does break out to the downside. Okay. So the range candle was at 10 a.m. and 12 o'clock gave the manipulation candle, which is right here, third candle, went up, closed inside, right? And while price can break down below the candle range, it's not guaranteed, all right? But this is going to be based on the 1 hour and 5-minute entry model. So now we drop down to the 5-minute to see what we got. And our best entry would have been at 3:25 p.m. This gave 1 to 2.5 right here, okay? So a little scalp trade here, but not bad because it did break out to the downside. So if you wanted to hold on to that, you could, but even if you didn't and just wanted to take it to the bottom of the range, you would have got 1 to 2.5. But again, that's based on this structure. Okay, so this was hour 1, hour 2, then hour 3 came back. It pretty much stopped out anybody who went short here and then went down. So that's something else to look for. But the main thing is that you look at this high to be rated and then close below and then price to just continue and complete the range. That's it. So I just took this structure and applied it to a 1-hour chart. It's all random. You can use any time frame though. It doesn't matter. All right. And then the last one we're going to go over is multiple candles. Multiple candles inside the candle range theory. So you have your range candle. That's still number 1, a good range candle. Notice how all these candles could not tap above the range until this one, then close back inside, and then price going to the downside. So we take this structure and apply it to a 4-hour. Okay. So you have the range candle here. This one poked above as well, but this one did too. So sometimes you'll have this where the range just stays there. This high never really gets broken. And then eventually on this close right here, then price moves to the downside. All right, right here. All right. So the entry model would have been a 1 hour. So let's see where a good 1 hour would have been. So the best entry would have been at 10 p.m. on this one. This was on New Zealand dollar. So this is the 10 p.m. This is a 1-hour chart right here where you see price poked above the range, closed inside. As soon as that candle opens at 10 p.m., you take it. There's no drawdown on that trade. This gave a 1 to 3. It did break out, but again, breakouts are not guaranteed. It may stop at the range bottom or it could keep going. We just don't know. There's no way to predict that. I don't want to act like that's possible. Sometimes it happens, sometimes it doesn't. We don't know. Okay, so all these models are completely made up. I made them all up. Okay, you're free to do the same so that you have a sense of ownership. It's one thing to take someone's model and use it. It's something else to create your own, which you can do. So again, you want to pick the structure that you like the best. That's easiest for you to see. And then you pick times that work for you. So if you know that, hey, look, I just want to trade on Tuesdays and Wednesdays, then you're just counting on Monday to make the range. If you want to just trade on Wednesday, this then becomes Wednesday, this becomes Thursday, this be Friday. Either way, the days don't matter. You're just looking for the structure. But you got to find that. You got to decide on the structure, and then you have to back test it to see how often it occurs. All right. Now, let me throw this disclaimer out real quick. Some people are going to be tempted to ask, okay, well, which one of these has the best win rate? Is it this one? Is it this one? Is it this one? Is it this one? Or is it this one? Which one of these wins the most? Don't bother. Okay? Don't bother. Every time you take a trade, your odds of winning are 50-50. Period, point blank. You'll either win or you lose. Don't get caught up in the win rate trap. Waste of time. All right? Waste of time. There is no best model. There isn't one, I promise. So in conclusion, I prefer the 2 to 3 candle create the high or low of the day of the week to filter out some low probability range candles. What do I mean by that? I mean that I prefer that. See how this Tuesday creates the high of the week and then it goes down. That's what I like to see. This, let's pretend that this is like, just say 4 a.m. or whatever. This creates the high of the day and then it goes down. So I like these candles here to create a high or a low. That's all I'm saying when I say that. So that helps. Now, depending on your circumstances, it'd be helpful to keep the range candle the same. So allow me to explain that part. So if you want to trade this model, you're only looking at Monday ranges, and that's it. If you want to trade this model here, and let's say it was at a 4-hour chart, so you're only looking at, let's just say, a 4-hour time frame, like 1 a.m. So this range, you're only looking at 1 a.m. ranges. For this model right here, let's just say this is a daily. Let's just say this is Wednesday. So you're only looking at Wednesday ranges, Thursday, and then Friday to do something like that. So keep the range the same is what I recommend. Either the same day or the same time frame. Let's say like this right here. If this is a 1 hour, you're only looking at the 10 a.m. This is just the 10 a.m. 1 hour candle. Okay, every single day to have some continuity. This one right here, like I said, if you're doing an 8 hour channel, like I just mentioned, see how this is a 1 a.m. range? So for your back testing, you're just going to say, okay, I'm only looking at 1 a.m. ranges on the 8 hour chart. So that's what I mean when I say keep the range the same. That way you'll know exactly what to back test. So all you're doing is you're checking 1 a.m., 1 a.m., 1 a.m., or something like this. You're only checking on Monday, 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 like that. Okay, I hope that makes sense. Otherwise, you'll be at the chart for days and weeks and months trying to find it. Don't do that. Make it easier on yourself. Okay, I wouldn't recommend any CRT lower than 1 hour. All right, and I definitely don't recommend 1 minute charts for entry models because you can have a lot of false signals. The lowest I would go is 5 minutes. Can 1 minute charts work? Yeah, but it's just not my thing. Can you make it work though? Sure, you won't know till you back test. All right, but I wouldn't try to do like this model right here on the 1 minute chart. I think it's a waste of time. Okay, so you can have the best strategy in the world, but if you don't have risk management, you won't make money. Okay, you need to have a plan on where you put your stops, where you put your take profits, and that's the beauty of the candle range theory. You already know that in this case, your stop loss can either go above Tuesday's high, it can go above Monday's high, you can even go above Wednesday's high. Your take profit is already right here, or you can even do the middle of the range. Those are typically the best two take profits for candle range theory: middle of this range candle or the bottom of the range candle, and that's it. Okay, easy. Okay, and again, do not worry about win rates because your odds are 50-50. You will either win or you will lose. So focus on risk to reward. If you win 50% of your trades making 1 to 2 or 1 to 3, you will make money. It's mathematically impossible to lose money if you can win half your trades and you're winning more than you lose. I promise. That's just the math. It's impossible. But where a lot of people go wrong is they try to move their stop loss, take the stop loss off, not stick to the plan. They want to give it more time, see if the trade will come back. Folks, these aren't ironclad. There's no guarantee that says this high is going to hold. You don't know if this Wednesday is just going to keep going right on up. You don't know. So you use a stop loss. That's all. It's okay to be wrong small, but when you're right, you want to be right big. That's the main thing. Small losses are no big deal. It's just the cost of doing business. But when you're right, make those wins count. Okay. So once again, replay the video, take a look at it. Not mandatory that you do this. If you like the way some of the candle range patterns I put on here work out for you, I don't have a problem with that. But what I really want to see is you guys become self-sufficient. Once you know what you're doing and what you're looking for, you don't need to watch any more of my videos. I enjoy it. I don't make money doing this. I enjoy teaching. It's just that I like for students, if anyone calls himself a student of mine, it's no different than raising a child. You want your child to be self-sufficient. So if you're a trader out there, I promise you can do it. Believe in yourself, have faith in yourself, have faith in your ability, your analysis, and you can recognize the structure of any one of these models and make it your own. Play with the time frames, see what works best for you, what appeals most to you, what's easiest to see, and you will get there. All right. So I appreciate your time and attention. Thank you so much for watching and hope you have a great rest of your day. Take care.